Welcome back to Investing with Confidence. I am your host, Joshua David. We're having a great time with my good friend and my good pal, Mr. Al Connickson, talking about the power of leverage. Now, that's in the financial markets, not just mortgages, not just credit cards. How we can use leverage in our investment accounts, whether we're trading for short-term income potential or our retirement accounts. If you happen to miss 2 tickets for the investing class, call 952-814-4410. I also like to make it easy for everybody. You can text the word INVEST to the number 484848. Don't forget, you'll receive a link back. Register for the free class with that link. You'll also get the Financial Quick Start Kit when you attend. That will help you get started right away if you want to understand more about how to time the market by letting price come to you. And I just want to add a little more talk about these leveraged assets as we were talking about in the last segment. We talked about futures. I want to talk about a asset. I would say everybody listening right now is trading right now and probably doesn't even know it. It's the forex market, the foreign currency market. If you have U.S. dollars, you are trading the currency market. I just want to give a little snippet for people, just something to think about. If the stock market is up 10% in 1 year and the U.S. dollar is down 10%, did you make a return? Your buying power basically has dropped. Think about that for a second. So understanding the currency market might be one of the biggest plays or the biggest skill that you might want to learn. So Al, you want to get into something a little bit different here. You want to talk a little bit about retirement techniques and strategies, but you mentioned something very interesting that I want to hear about. You talked about there might be something along the lines of 50 to 75% of your retirement account could be gone or vanishing in thin air. We'll call it in thin air. I'm sure you're going to shed some light on that. But what are you talking about with people losing this capital in their account and not even knowing about it?
Do you think that's a significant amount? I mean, might that have an impact on how someone lives in retirement?
50%, I'm going to say that's about half.
Yeah. So you're not as bad at math as I thought you were. I'm very impressed. And we've got a retirement dilemma in this country. There's an entire generation of people that have worked 30 or 40 years, to build a nest egg to get them through retirement comfortably, not realizing that 50 to 75% of what should be there for them is gone. Let's just say that you retire, and you retire tomorrow, and you look at your portfolio, and you have $2 million, and you're feeling pretty good. You and your spouse are sitting down, starting to put together a list of the places you want to travel, the things you want to do. There's a knock on the door, and your financial advisor is there, and he's saying, hey, congratulations on your retirement. Oh, by the way, write me a check for $1 million for my services. Now you are left with $1 million, not $2 million. Well, the truth is that that's not going to happen. You're not going to get that knock on the door.
That doesn't happen. But how does that happen, though?
The truth is you're paying that $1 million over time. You're not getting a separate bill for it, so you never really see it. I think if people actually got a separate bill for all of the fees that are taken out of their retirement plans, I think they would probably revolt.
Hey, I want to interrupt you for a second there. Is money being taken away or missed opportunity that you don't know about? Now, think of it this way. A lot of people put money into their savings account. I mean, I do. I think it's a good idea every single week because you don't really see that. So you don't feel like you're losing it. Think of that as the opposite way. You're getting money taken out of your account. You don't even see that. You don't even know.
And why that's so important is not just the dollars that are being taken out in fees. It's the lack of compounding of those dollars. So every dollar that's taken out, especially when you're starting out young, every dollar that's taken out might have ended up being thousands of dollars down the road, and that's no longer there for you. One of the advantages of these tax-deferred retirement accounts is the compounding of your assets. But then the fees that are taken out, that's what we consider negative compounding. And that example I used of the $1 million being, given or put into a check for your advisor, that only relates to a 2% fee. Now, is that average? Is that high? Is that low? The all-in cost, and you can Google the cost of a mutual fund. The all-in cost for a tax-deferred mutual fund is closer to 3 to 3.5%, somewhere in that range.
People still feel that's not a lot, though.
Well,
Over
if
time.
2% takes half away from what you have, what's 3%? And that doesn't include the plan sponsor's fees,
Exactly.
too. So, and you will never actually find all of the fees that are there. There's transaction fees, there's legal fees, administrative fees, all those things. But think about this. You go through kind of two phases in your life. You go through that 30 or 40 years where you're working, putting money into that retirement account. So you've got a chunk of money there to hopefully get you through retirement. But then when you go into retirement, you start drawing that account down. And if 50% is gone by the time you retire because of even as little as a 2% fee, now when you start taking money out, let's think about this. A lot of people use that 4% rule, which is now very questionable, but they feel that if they just take out 4% of their retirement money every year, they'll be safe. Well, think about this. You may be taking out 4%, the advisor's taking out 2%. So you've got another hit to the income portion of your retirement account. You don't have all of that to spend because part of it's going to be taken away from you.
Yeah, so many people are just conditioned to just let that happen. I'm okay with, if I'm getting a 5% rate of return, I'm okay with them taking 2 of that.
Yep.
Well, that just doesn't make a whole lot of sense to me. And that's money that's gone.
You're right.
And it's missed opportunity as well because that's not compounding, as Al is talking about. And if you feel like your 401k is not keeping pace with your age, that financial quick start kit that I've been giving away has techniques and strategies on what's happening there, but what you might be able to do. So I want to invite people to an investing class. When you register for this investing class from the link that we're going to text you back, you're going to get the financial quick start kit that talks about your 401k. Is that keeping pace with your age? You can text the word invest to the number 484848. You'll receive a link back to register for the free class. You have to register for the class and attend to receive that financial quick start kit. Now, with fees, diminishing people's returns and retirement accounts, we have a retirement crisis. How do you eliminate those?
Yeah, well, you either reduce or you eliminate them. You can eliminate them, but if you still are contributing to a 401k, if you're still in your working years, it's a 401k, 403b, whatever the employer-sponsored plan is, there are many choices that you have, and there are going to be some choices that have lower fees. Part of what we teach our students is what we call a dynamic 401k management, how to better understand what's in your retirement accounts, your employer-sponsored retirement accounts, what might be some better choices. The core strategy that we mentioned earlier, our foundational investment strategy, which identifies where the big players are buying and selling, you can use that same strategy along with whatever is in your retirement account, whether it's a mutual fund or an exchange-traded fund or stock. So you can still trade better probably within your 401ks, reduce the fees, but then as soon as possible, if you can take the money that's in your 401k, if you leave a company for any reason, retire, get fired, resign, whatever, that money can be rolled into a self-directed IRA where you eliminate fees. There are no management fees within those self-directed IRAs. And you may be saying, well, now I've got to make all the choices. That's exactly what you're doing in your employer-sponsored plan now. The plan sponsor is not sitting down with you saying, here's what you should invest in. They give you a list of things, and then you have to make the choice. Now, in a self-directed IRA, if you want to still invest in mutual funds, you can do that. But why not look at some of those leveraged assets where you can have smaller amounts of money and maybe multiply the impact of each dollar by 10 or 20 or 50 or 100 times? And what about when the market's going down? In your employer-sponsored plan, there's no way for you to participate that way. Within a self-directed account, there are assets and strategies that can give you the potential to benefit in a down market, a sideways market, an up market, plus you can have protection. You can have an insurance policy on your portfolio, much like you do on your home or your car.
Yeah, and there's a lot of, with retirement accounts, people have 401ks, have IRAs, and left a company or whatever, they want to be able to self-direct. And in these investing classes, you go over those techniques and concepts, but you brought back up that core strategy, which is how you time the market by letting price come to you. The financial quick start kit that I'm going to give away when you register for this free class and attend, it helps you get started right away with that, how to time the market, whether in income accounts or that retirement account, the IRA, 401k, whatever that may be. So please call 952-814-4410 for 2 tickets for an investing class. These are physical classes. Al teaches these here in Bloomington. They're free. They're only 2 hours. 952-814-4410. You can also text the word invest to the number 484848. That's what you're going to receive that link back to register for the free class within that link. Al, what do you got coming up next?
Well, we've got a lot more to talk about as far as retirement because that is such an important part of everyone's life.
Well, let's do that. Let's talk more about retirement.
Let's do it.
Different techniques and strategies to use the stock market, options, futures, and Forex to hopefully get to that promised land, which is that retirement years of age. Once again, for 2 tickets, 952-814-4410. You can also text the word invest to the number 484848. You receive a link back to register for the free class. You also get the financial quick start kit when you attend. This is Josh and Al, Investing with Confidence. We'll be right back.